All right, you've probably heard that the stock market has been going a little crazy. GameStop, a brick and mortar chain selling video games, is suddenly surging. We mean surging. A month ago today, it was trading at about 20 bucks per share. 2 days ago, it was under $80. Today, nearly $350 a share. So what is happening? And should you, look at that, that is just crazy, right? Should you have anything to do with this? Here to help us understand what is going on is assistant professor of the business school at San Jose State, Matthew Faulkner. Professor Faulkner, thanks for your time.
Hey, thank you for having me. Happy to be here.
Yeah, okay, GameStop. Its stores have been in shopping malls forever. People aren't shopping, for games in malls anymore. It's losing money. Its future doesn't look so rosy. So help us understand, give us the briefest, easiest way to understand how and why this stock is suddenly shooting into the stratosphere.
Hey, ignoring the fundamentals and what's happened in the last 2 days is a concept of a short squeeze, which is there's a lot of money pulled together in big firms that shorted the stock, which means they're essentially thinking it's going to go down, and if it does, they'd make money. Well, what happens is in Reddit, a bunch of investors got together and said we could perform what you call a short squeeze, and if we start having that stock price go up, meaning we all buy, then those people that have shorted the stock or bet for it to go down are going to have to, what we call, cover the short position, which means they're going to have to start buying or they lose money. And so what you're seeing is a big pool of people buying the stock, and it's running up in the last 2 days. Not a common instance of what we usually see.
Okay, so unless you're part of a hedge fund, is everything fine with this? Because they're losing their shirts, but they're the big guys. It's like David versus Goliath. So if the little guy, David, is winning, what's the problem here? Explain that to us.
I think that the major problem we worry about in the future isn't so much what's going on right here with GameStop in terms of investors pooling their money and energy together to invest in a stock, is some of the, as you said at the beginning, the information that's passed. Is the information on GameStop should be valued at $350 a share? Or is it being manipulated in a harmful manner and going to end up harming smaller investors along the way as it does big short-selling investment firms?
Explain that to us, right? Because this is in part happening because of small investors on Reddit, right, passing information. And then Robinhood, right, the investment app that doesn't charge you fees, making it easy for people to kind of trade like this. But tell me about the dangers that you see from what's happening here.
People don't like volatile markets. Markets don't like volatile markets. The idea of moving and the chance for you to put money in and it go down is a scary thing. So that concept is I think the biggest concern. But personally, I don't see a lot wrong, just like as a hedge fund pools money together to invest in companies, that if individuals pool their money to invest, that is okay. I think it comes down to, just like in politics, misinformation is a caution for anyone looking to invest in GameStop at this point, is to understand a bit more about, as you mentioned at the beginning, the fundamentals of the company. What's it look like? What's it really doing?
Right. I mean, that's what I do, right? I mean, the long-term stuff. What are some of the other stocks that have been influenced recently like this? I know BlackBerry, I think, right? Etsy, and even Tootsie Roll. What are some of the others?
Yeah, I've seen AMC as well. I guess there was a list of short-sold stocks on that Reddit thread, and you're seeing that happen in a couple other ones where they're trying to push those short sellers out, the people betting for it to go down, and those people have to buy to cover those downsides, and you're getting a lot of upside.
Okay, so but if the institutional investors are betting that those will go down, then fundamentally those are not companies that have rosy futures. But you can make money trading off of companies that don't have rosy futures. That's what this means.
I would agree this is short-term trading, but look at GameStop. I wouldn't argue their fundamentals in the past haven't been good. They've been on the decline, but a couple board of directors, Chewy founders who have moved the pet industry online, are now on the board of directors. And so that fundamentally may change the company and the outlook. Mm-hmm. However, a 800% gain in 2 days is always a caution for anybody looking to invest at this point.
Yeah, well, part of that, I wonder how much of it is driven by influencers, right? We have this tweet that we saw from Elon Musk of Tesla, and we know he has kind of a cult-like following. He tweeted a couple of days ago, GameStonk, and yeah, tell me about the impact of this.
Yeah, I'm not sure if it's the any news is good news, whether good or bad. So it brought light to GameStop in another setting, and people started looking into the Reddit and trying to learn about a short squeeze, and have been jumping on the bandwagon of those small investors trying to lead the way. And you even see big investors from out in Silicon Valley putting in, as we saw today, the social capital. I won't name the names, but he was on CNBC, and he just bought a lot of call options in GameStop and is now donating his profits, but he made a lot of money doing it as well, and he's not a small investor.
All right, Professor Matthew Faulkner, by the way, you were recommended to us by my colleague David Louie, who also interviewed you today, and he has in-depth reports coming up on ABC7 News at 5 and 6. Don't go away, because we'll continue to chat for a couple minutes on Facebook Live. Take a short break on the air.